It can be taxing to get through the entire process of income tax filing by yourself, especially if you're not working with a CA. What are your sources of income? What if you have more than 2 houses, none of them earning any income to you? How to claim deduction of interest paid on your home loan? How to claim deduction for donations that you have paid out during the year? Well, if you have been worried with all these questions, then this video is for you. I have created a checklist for taxpayers just like you so that you know what questions to ask yourself before you file your income tax return for FY 2021. So without further ado, let's begin. Hey there, welcome back to the Sonia Davar Show. I'm Sonia Davar, Chartered Accountant and Business Finance Coach, and on this channel, we share with you all the tips, tools, and resources you need to start and grow your profitable business, save lakhs of rupees on taxes, and build your own wealth. At the end of this episode, you will know what questions to ask yourself, and filing your taxes won't be such a big, confusing task anymore. Are you ready? Let's begin. The due date for filing your income tax return for FY 2021 has now been further extended to 31st of December 2021. But if you are an individual taxpayer, you might not be in the know of all the information that you need to keep in mind before you file your income tax return. How to claim deductions? What about vacant properties that are not earning you any income? What about foreign assets? Are those taxable? Wait, what about crypto? Well, I'm here to answer all of your questions. Well, don't just grab your pen and paper just yet and start writing down what you need to keep in mind for filing your taxes, because at the end of this episode, I will be sharing with you a checklist that you can download for free, which contains all the details that you need to keep in mind before you file your ITR. So watch this episode till the very end to get hold of your free checklist. So first thing first, you will need to determine what will be your due date for filing your income tax return. Now there are 3 different due dates for filing ITRs for 3 different scenarios. First, when there is no audit applicable, or if you are just an individual filing income from salary, capital gain without any audit. Second, where you have tax audit also applicable. And the third scenario where you will need to file your transfer pricing audit report along with your ITR for business. So for these cases, there are different deadlines for filing your income tax return. I have a separate video where I have explained all the new extended deadlines for FY 2021. So don't forget to check out that video and know what deadline is applicable in your ITR. The second thing that you need to know is your Form 16. So if you draw a salary, your employer would share with you a Form 16 which gives you details and the breakup of the salary income that you earn. So your salary is not just one amount, it may have different components such as HRA and other components, and it will also show how much amount have you claimed as tax deduction, under which heads, and what all other deductions your employer has considered while computing your taxes, and how much TDS have they deducted in your case. So if you have not got your Form 16 from your employer or any of your previous employer, go ahead and check out those details, and also cross-verify the income that is reflected in your Form 16 with your Form 26 AS. Now this Form 26 AS is basically kind of your passbook which you can download from Income Tax Portal, and that will show how much your employer has shown to Income Tax Department about your income that you have earned during the FY 2021. Next, you need to keep in mind your rental income. If you fail to declare this income, it can still be traceable because your tenant might be taking deduction of the house rent that he is paying you by way of house rent allowance claimed from their employers. So don't make a mistake of not disclosing this income. Even if you're earning a rental income, you may have to keep note of your rent agreement. How much rent are you collecting from your tenant, and disclose that in your income tax return. Now, what if you have 2 house properties? If you hold 2 house properties and both have not been let out for FY 2021, you have the option to keep both the house properties as your self-occupied properties and that will not attract any income or deemed income that you will need to report in your income tax return. In this case, you might have to disclose that you were actually in the possession of both the house properties, and hence both these houses were not being let out. But if any of these houses are actually let out, then you will have to disclose the actual income that you have earned in FY 2021. Now let's take a scenario. What if you have more than 2 house properties? Now, if you have more than 2 house properties and none of them are actually earning you income, you will have to select one of the 3 house properties as deemed let out house, and you have to charge a notional rent that you might earn out of that property to your income tax return. Now, which house property you have to choose as deemed let out, you have the option to select. So you can select whichever house property gives you the least amount of notional rent, even if you are actually staying in that house property. But if you have more than 2 house properties, you have to select deemed let out income as your income, even though you are not really actually earning any income from the 3rd house property. Let's talk about deductions from house property. So if you are paying any interest for the loan that you have taken to construct that house, whether it is self-occupied or let out, you are allowed to claim deduction of the interest that you have paid towards construction of that house property. For this, you may have to get an interest certificate of the total amount of interest that you have paid for FY 2021, and you will get 1/5 the deduction over 5 years from the time the construction of the house is complete. The next document that you will need to keep is your capital gain statement. You can ask your broker to provide you a capital gain statement to check for any gains or loss on stocks. And for gains or loss from mutual funds, you can download a capital gain statement from CAMS or CARVI, depending on who is the registrar and transfer agent for the mutual funds that you are holding. I have a separate video on how you can download capital gain statement for gain or loss from mutual fund from CAMS and CARVI, and I will share the link in the description below. So go ahead and check out and download the capital gain statement to know how much is your gain or loss from investments in mutual fund for FY 2021. Next thing that you will need to consider is sale of property. If you have sold a property in FY 2021, you will need to keep your sales deed in check. You will also need to keep ready your purchase deed, your valuation certificate as on 2001. If the property is actually purchased before 2001, you will also need the cost of improvements that you have incurred on that house property over a period of time, because that also you can consider as the cost of purchase and the cost of improvement together to arrive at your capital gain. So all of these information will give you how much capital gain have you incurred from your house property. The next thing that you will need to keep in mind are your deposits. So your bank can provide you with an interest certificate of the interest that you have earned on the fixed deposits with bank, and if you also have recurring deposits or any other deposits, you can also ask for interest certificate for those as well. The second place where you will get all of these information are your Form 26AS, and from FY 2021 your ITR forms are also coming with pre-filled information, where ITR form will also provide you your income that you have earned from FDs or your post office deposits and other things. But because the portal has a lot of glitches, the income that has been pulled out in the pre-filled ITRs are not very reliable. So you will have to either get certificates directly from bank or check the income in your Form 26AS to know that the income that you are reporting is correct. Next thing that you will need to keep in mind if you are holding any corporate deposits. So if you are holding any corporate deposits, ask your financial advisor or financial planner to give you an interest certificate for the interest that has been earned on those corporate deposits, because even though you might not have received that income in your bank account, the income will be taxable based on the interest that you have accrued on these investments in corporate deposits. So make sure to get the certificate from your financial advisor. Any other income that you need to keep in mind are if you have investments in PPF, make sure to update that passbook, and you have the interest amount updated in the passbook for FY 2021 and show that interest income in your ITR. That income might be exempt income, but nonetheless you will have to disclose that income in your ITR as well. Apart from that, go through all the list in your bank statement and see if there is any other receipt in your bank statement which may be considered as income, and see if you need to disclose those income in your ITR as well. Now that we have seen what all might be your income, let's come down to the expense side and see what all expenses can be considered for deduction in your ITR. So the first thing that you need to do is look at donations. So if you have made any donations for FY 2021, make sure that you have the receipts, because in your ITR form you will need to provide their PAN, the address where you have made the donation, and specifically the name and PAN number of the place where you have done the donation. And also make sure that this donation is not done in cash and it is done by way of a bank entry, because the cash donations are only allowed up to 2,000 rupees. Other things that you need to keep in mind are all the debit side of your bank statement. Make a note of all these debits from your bank statement and look out for things such as expenses towards medical insurance premium, expenses that you might have incurred towards tuition fees, payments that you might have done towards EMI for your home loan, or any other investments which are reflected in your bank statement, and see if those investments are also incurring any income for you for FY 2021. If you want to know what all deductions are available to you as an individual, you can download our free guide on tax deductions for individuals, which is updated for FY 2021 and is absolutely available for free on our website soniadavar.com, and the link to that guide is also given in the description below. So if you want to know about all these deductions, don't forget to download the guide. Another major income that you need to keep in mind for FY 2021 are your dividend income. Before FY 2021, dividend income was not taxable, and hence many people have the habit of overlooking the dividend income. But from FY 2021, even dividend income are considered as taxable income, so you need to report dividend income that you have earned for every quarter of FY 2021. So while you are also looking at the debit side of your bank statement, have a look out for expenses such as your electricity bill. So if you have made electricity bill payment of more than 1 lakh rupees for FY 2021, you will need to file your ITR even if you have not crossed the basic exemption limit for filing ITR. And if you have made a foreign trip, and if you have paid expenses of more than 2 lakh rupees on a foreign trip for yourself or for someone else, you will also need to file your ITR mandatorily, even if you don't have your income beyond the basic exemption limit for filing your income tax return. So this is about income and your expenses that you need to keep in mind. The other things that you need to keep in mind before you file your income tax return are your directorships. So if you are a director in any company, whether it is listed or unlisted or it's domestic or foreign, you will have to disclose the name of the company, the PAN number, the details of where you are a director in the company. And second, if you are a shareholder in any unlisted company, in such a case also you will have to disclose the number of shares that you are holding, the price at which you have bought the shares, the date at which the shares have been allotted to you, and if during the year you have sold any shares of those unlisted companies, you will also have to disclose those information in your ITR as well. Now, if your income is more than 50 lakh of rupees, you will also need to give details of your assets and liabilities, apart from the income that you are earning and the deductions that you are claiming in your ITR. Now that you have done your tax prep and have all the necessary documents that you need for filing your income tax return at one place, filing your taxes will be fairly easy and quick. So why don't you get started now? Download the checklist from the link in the description and make sure that you are answering all the questions that are there in the checklist so you don't miss out on anything. And if you like this video, don't forget to hit the like button, and while you are at it, subscribe to the channel and hit the notification bell so that this video can be pushed out to more people who may need this information and they can have their income tax filing made easy. Make sure to check out our other videos on this series of income tax filing made easy to learn more cool stuff for free. With this, I will see you in another episode. Bye for now.